Welcome back to Nuclear News. We're in the early stages of the nuclear renaissance. We've been covering it every single week. What's the fuel that's going to power the nuclear renaissance? Uranium, right? Who controls uranium? The miners, right? Very undiscovered. Very few people understand what's going on with these assets. We know interest rates are the oxygen of the financial system. So we've been fighting this massive spike in interest rates. This is the 10-year treasury yield at 4.2%. In September, it was 3.6%. So that's a huge move, right? Again, financing got super expensive. Well, just recently, we did have the market get pretty excited by Trump's Treasury Secretary pick. And so that line came down, right? So we're really monitoring this line. If the cost of capital can shrink, then the value of uranium mines skyrockets, right? Because if you know about how to value a mine, you calculate the net present value, which takes into account all future revenues, all future expenses, and all interest-related costs, right? So the higher that interest rate is, the more costly it is to get a mine out of the ground. So we want these interest rates to ultimately come down. So far, so good. And last week, we talked about an escalation in tensions between the United States and Russia, right? Russia was saying they're going to essentially starve the U.S. of enriched uranium, right? We're super heavily reliant on enriched uranium. This is what Cantor Fitzgerald said, right? Multiple news outlets are reporting that Russia has imposed temporary restrictions on the export of enriched uranium to the United States with unspecified exemption. While the biggest positive price action to the development will be in the enrichment and conversion elements of the nuclear fuel cycle, we expect uranium oxide prices to also be positively impacted. At this time, acting as a positive driver for the uranium equities, right? Booming fundamentals. That's what we're talking about. At this time, it is unclear as to how extensive or limiting the Russian enrichment uranium export restrictions will prove to be. What is clear is that bifurcation in the uranium market is accelerating, and this is a positive price driver for the entire sector. So we talked last week about how 2024 is the last year of these nuclear utilities having a huge stockpile of commercial inventories of uranium. 2025 is when that falls like a rock. Well, look at what Cameco, one of the world's largest uranium miners, is saying the outlook is after 2024, right? This is 2024. This is the future. Why does supply in dark blue fall off a cliff and demand skyrocket? Well, partly because this is the last year of massive commercial inventories, right? So what happens in 2024 when those commercial inventories fall off a cliff, supply falls off a cliff, demand skyrockets? This is according to the experts and the people that actually study this space, right? We're about to hit a massive brick wall when it comes to available supply, and demand is set to accelerate exponentially, does not get bigger than this, especially if you're in the year 2024. Because Kazatomprom, the world's largest uranium miner, reports that uranium sales to China rose 58% to a whopping 47.5% of Kazakhstan's total sales in the first 9 months of this year, while sales to USA fell 19% to a low of just 8.7%. They're lowering their sales to the US, they're increasing their sales to China, right? So again, wait till 2025 when these utilities wake up to the fact that there is not enough uranium available for them to acquire at cheap prices. They're going to have to pay an absolute fortune for their uranium. France is working on a plan for zero interest loan to finance construction of 6 nuclear reactors, right? 6 new nuclear reactors in France, right? So we already have a multi-decade supply crunch on our hands. What happens as 6 new nuclear reactors are built in France? And then what about the wall of capital incoming from some of the biggest companies on the planet into building even more reactors, right? Amazon offers $334 million for nuclear reactors to be built at Hanford. So Amazon is investing heavily into X Energy. X Energy is a competitor to NuScale and Oklo. You can't buy X Energy now. It would obviously become a very valuable company if it's essentially going to be providing the nuclear power for Amazon's massive data centers, right? To power Amazon Web Services. That's what we're talking about. But Oklo has huge partnerships. NuScale has huge partnerships, as discussed on this channel, right? So we're staying on top of the SMR space as well. And then Brazil's Anchor 1 is approved for 20-year life extension. So just another example. Every single week, the future projected demand of uranium accelerates and the supply shrinks, right? That's what's going on with this space.